In Consumer Corner, we take a look at trends creating a buzz online in China. On today's show, we'll see what Chinese internet users have to say about the country's underground private loans. There's news running around all across Chinese media about the potential collapse of the shadow banking market. Shadow banking includes loans made under the table at super high rates. Some of these loans have already gone bust, and more are expected to default. In 2012, it was Ardos. Last year, it was Fugu County in the Shanxi province. Now another underground private lending market has collapsed this year. China's state-owned TV station, CCTV, has recently reported that a coal chemical company in Fugu County in the Shanxi province was illegally raising 2 billion yuan, or about $320 million in funds. The company promised lenders they would get 24% in returns on their investments annually. Hundreds of the county residents lent their money to the company. The promised due date was March 2nd. As of right now, all that money is gone. The company's owner disappeared from the public eye in February. When CCTV journalists visited the company's office, the office was already full of money lenders. Some of them were lying on the couch, others standing around and eagerly asking company staff about their money. The doorman told the journalists that since the end of February, there were between 30 and 100 people asking for their money back each day. The amount of money these people lost ranged from tens of thousands to tens of millions of renminbi. Some lenders even claimed that they needed the money to pay hospital bills. Now in Fugu County, there are already 5 underground private lending companies that went bankrupt. The local government has arrested 7 company owners and asked them to repay people's debts. Despite these efforts, not everyone's money is being paid back. The private lending market in Ardos, Shemu, and Fugu share a similar situation. As Caixin.com reports, all 3 of these counties are heavily reliant on coal mining. China's rapidly increasing coal prices between 2002 and 2012 brought these countries a huge amount of wealth. Taking Fugu County as an example, over 2/3 of the county's GDP was contributed by coal mining industries. Since 2002, China's coal prices have gone up from 400 yuan to over 1,000 yuan, or about $160 per ton. Many local residents started to raise funds to run coal mining companies. The huge amount of demand for capital stimulated the underground lending market. However, the industry is no longer profitable because since 2012, coal prices started to decline. Coal mine owners are not able to repay their debts to private lending companies when coal prices decreased. This eventually broke the capital chain for underground lending companies. Local residents finally realized that the collapse meant that their money wasn't coming back. Apart from coal mining companies, some capital is also flowing to the real estate market of small counties. As finance.sina.com.cn reports, local real estate developers have announced they'll reduce housing prices in order to maintain their capital flow. The county's housing prices have plunged from its climax of $180 in 2012. Now they're just $100 per square foot today. That's over a 40% decrease in 2 years. Some real estate developers are even claiming that they'll refund any losses if the housing prices keep declining. But we don't know if they will actually pay for that. It might just be a desperate sales strategy. Chinese internet users also expressed their opinions on China's underground private lending market. One wrote, quote,
"A small county's housing price can reach 12,000 yuan per square meter. That's almost equal to the housing price in China's second-tier cities. Now I understand how crazy the county's underground private lending market is."
Another Weibo user agreed, quote,
"Look at the county. Despite sky-high housing prices and indebted local residents, what else does the underground private lending market bring to the county?"
Some other internet users blame these people who put their money into private lending markets. One wrote, quote,
"There's no such thing as a free lunch. Come on, 24% annual return on investment? It's a coal mine, not a gold mine."
Another one wrote, quote,
"Do these people really not know the consequences of private lending? Did they see what the market did to Ardos and Shemu County? How dare you guys still play this dangerous game?"
But there's still a Chinese internet user that had a positive take on the issue. The commenter said, quote,
"I have to say CCTV did a good job. It is hard to imagine this kind of news could have been broadcast several years ago. It is a signal that the Chinese leadership will not allow market bubbles to exist."
Apparently, people know putting money in shadow banking is full of risk, but they still choose to do it. And in some regards, you can see the rationale. There are only a few channels that allow investments from individuals. The reasons why small companies are looking to shadow banking is because they can't get loans from anywhere else. If banks lower interest rates for these companies, then it will put a major dent in the shadow banking industry.